Jessica Inskip, the Director of Investor Research at StockBrokers.com, and you're watching Taking Stock.
2 minutes to go here until the closing bell on the trading floor of the one, the only New York Stock Exchange on this Tuesday, July 21st. Speaking of one and only, look who joins me now to kick off the broadcast, the Einstein of Wall Street, the great Peter Tuchman, finishing the day basically at session highs. We started high, and we went higher, and with 90 seconds left, talk to me a little bit about what you saw more broadly after a few days of losses.
Look, the market loves a trend trade. Right, the trend is your friend is an old Wall Street saying, right? That means when the market opens at one level and it continues to go higher and pulls back to support levels, that shows a strong market. That shows not just enthusiasm, but it's really creative, it's good for the market. And you're probably going to see it as far as advances versus declines, as people are feeling confident. We've had a number of days where market's been indecisive. We're not sure whether we're going to engage what's happening in Iran around oil and stuff like that, where we have oil up, markets down, oil down, markets up type of a thing.
Right.
Here, I think people are feeling a relief that it's going to be what it's going to be. It will be over when it's over. It's not going to really make or break our quarter here. But you know what? It's time to start buying stocks.
Yeah.
And I think that's where we're at. When you have a market that opens high and continues that way with little small pullbacks, that's a solid market.
And to your point, on a day when oil itself is up 3%, you usually see equities sell off on those days, but today, everything's kind of going up. We set the stage for mega cap earnings tomorrow. Come back and see us tomorrow. The great Peter Tuchman.
Next in 5.
God's love, we deliver. Time now for the close. Love that. I love that one. Not just 3 gavels, 3 fast gavels here. This is God's love, we deliver. Special group down here on the trading floor of the big board. Bringing about a close to the trading action down here on Wall Street for this Tuesday, July 21st. Your final tale of the tape, live from the New York Stock Exchange. The S&P 500 up 0.9. The Dow up, let's call it 0.75%. The New York Stock Exchange Composite Index in the green, looks like 0.9. The numbers are hard to read here. And the small caps, the Russell 2000, the best of the bunch, up 1.5% on the day. Tesla shares positive. Microsoft, the big loser, out of the Mag 7. Tech, energy, materials, the leading sectors in the S&P 500. A few lagging sectors underperforming on the day as well. That includes consumer staples, telecom stocks, as well as utilities. Over to the Dow we go. Your big Dow winners on this Tuesday, 3M, Caterpillar, and UNH. We're going to talk a lot more about 3M's big day coming up in just a bit. And your Dow laggards, Salesforce, Walmart, as well as consumer staples favorite, Procter & Gamble. More defensive names, more or less tend to be in the red on a day like today. Few sectors of note catching a bid on this Tuesday. The big banks, oil and energy stocks, healthcare, biotech stocks overall doing pretty well. Industrial names, the high beta, high volatility parts of the market, quantum, memory, semiconductor. Really nice bounce back session, all things considered, for stocks there. The semis ETF, that's SOXX and SMH, still about 15% off their all-time high from June 22nd, but very much a lot of these big tech and memory names, quantum names, getting very much a relief rally on the day. Let's bring in our first guest. Ben Emmons is the CIO and founder at FedWatch Advisors, joining us here for the first time in person, right?
That's right, first time.
My man, thank you for being here. Your take more broadly on what we've seen out of earnings season. Obviously, we got past the big financials. We are setting the stage for a few heavy hitter mega caps coming up. We've had a lot of companies beat, but maybe not get the rally that people were expecting. What have you seen so far?
So it is really good earnings growth, and it continues. But like you said, it is not necessarily the bullish picture, because maybe it's too much priced in, too overextended, too, like say, hyped up. We obviously had the big IPO from SpaceX, which I think started to put pressure on the market because of basically being somewhat overextended. But I will say this for this week, JD, that like take a company like Intel and IBM, they've both drawn down quite a bit, and they're solid companies. They just have drawn down on the sentiment. So I think they're going to beat earnings quite significantly. Even though IBM came out with that bad news, but they're going to beat earnings. And I think those are opportunities to buy. I think those are great stocks.
Yeah, IBM was kind of a pre-earnings warning,
Yeah.
sort of setting the stage a few weeks in advance for earnings. You mentioned SpaceX. It's been down and to the right, but a little bit of a relief today, up 3%. If you're following SpaceX every day, you're like, will this thing ever turn green? Today it did. At long
Finally,
last.
yes. Yeah.
What do you follow out of names out of Tesla and Alphabet? They report tomorrow. These are some of the most important, most consolidated names in the S&P 500. The first of the so-called Mag 7 stocks set to report.
Yeah, so if you think of Tesla, I mean, it has outperformed SpaceX for a period of time. I guess people were looking at a merger between the two. But what's interesting now is that today with these tariffs announcement on Canada, it's bad for Tesla, because they get a lot of parts out of Canada. So we'll see what they're going to say about it. Not going to impact the earnings now. Probably going to be a decent beat. But the one to watch is Google because of that new chip that they're developing, what they do for their TPUs, right? It's different than GPUs. I think that's the biggest news. I think Google will probably get more of a, let's say, relief rally on kicking that off after the 2-3 weeks of this memory sell that we've seen, because what Google is really doing is trying to get autonomy from NVIDIA and others and compete there with those chips. And they're not dealing with this margin issue that came up out of the new LLM that we saw, I believe, on Monday from China or the last week.
Sure.
Right, so that's a bull story.
If you and I were having this conversation in March and April of 2025, we would say, oh no, more tariffs. We know what that means for the markets, and yet here we are, Ben Emmons, today and yesterday, we've got new tariffs. We're still basically at all-time highs. What has the market learned, maybe from that big 20% drawdown in the spring of last year, that maybe it's implemented a little bit differently every time it has another Trump tariff-related headline?
Well, they have learned that Trump is the taco, right? I mean, basically, if it really impacted the market significantly, negatively, he will pull those tariffs a bit back or put them on pause. But in this case, though, JD, we talk about a year-long investigation into trade practices, and these tariffs are going to be in place permanently. And unless the president changes it or Congress intervenes, this is actually a significant change today. And look, we're importing a lot of goods out of Canada. It's right across the board, so it's impacting on the economy really quickly. You put 50% on there, which is the maximum. I mean, it's going to drive up our inflation. It's going to potentially hit our growth rate sometime in the next 1 or 2 quarters. So it's actually not a good story. I think the market's distracted today by the Google earnings coming up, by the chips rally overnight from China, by buying chip stocks, that sort of thing. But once that is all kind of phased out, the tariff story comes back, because they're not done with these investigations, right? So it's a recurring story. In this case for Canada, that's negative for the US economy. It's not good.
Ben, sadly, I'm out of time, but I hope you'll come back soon, because we do have a big FOMC meeting next week.
Yes.
Kevin Warsh's second. Give us some sense on the path forward for interest rates. Ben Emmons, friend of the show, CIO, founder at FedWatch Advisors. My man, come back anytime. It's good to see you again.
Good to see you. Thank you.
Robbie, you'll grab your mic. Bobby, we'll head this way here through the top analyst calls that move the tape this morning here on Wall Street. First up, Bernstein upgrading 5 and below to outperform. They say the fundamental picture overall is improving. 22% upside potential, shares up 7% year to date. Next up, Raymond James upgrading Ralph Lauren to outperform, saying the company is firing on all cylinders, increased confidence in website traffic, mobile app data, and Google trends. Shares up 6% on the year. Finally, Susquehanna downgrading Live Nation. Let's go this way, Bobby. Thank you, brother. You know the rules. It's my show. I'm taking the chair with me. Susquehanna downgrading Live Nation to neutral, mainly on valuation concerns. They say a strong concert schedule already kind of seems baked into the performance of the stock. Shares up year to date 26%. We'll take a look at 2 stocks that call the New York Stock Exchange their home. How about Oracle, up more than 4.5% on the day? Still down about 50% from the beginning of June, however, has been down 25 of the last 34 trading sessions coming into today. Mizuho analysts reiterating the stock as outperformed, calling it too attractive to ignore at these levels. One of the most attractive risk-reward policies in their coverage. Bobby, how about a look here at 3M? It's a giant of the Dow, and it was a giant here at the big board today, up 7.3%, kind of retesting its year-to-date highs going back to February 12th after reporting a big beat on earnings this morning, but even more importantly, reporting a raise on full-year guidance. Shares up 7.3%. They were already up 9% on the year coming into this morning's session here on Wall Street. In partnership with Monarch Market CEO Anthony Denier of Webull Financial and co-founder and CEO of Monarch Markets, Ben Haber, both sat down with Johnny Fernandez of FinTech TV. They discussed how their new partnership is expanding retail access to pre-IPO private companies. Take a look.
The biggest growth often happens when a company is still private, but that world has always been closed to everyday investors. Webull is changing that, and through a new partnership with Monarch Markets, qualified investors can now buy into private companies right from the app before they even go public. So here to explain how this works and what the risks are is Anthony Denier, CEO of Webull, and Ben Haber, co-founder and CEO of Monarch Markets. Guys, welcome to you both. So happy to have you guys here on the floor today.
Yeah, awesome to be here.
All right, so let's get started from the very beginning. The partnership between Webull and Monarch. How did that come together, and why is it now the most important moment to open up this pre-IPO access on the platform?
I mean, we've been working together for a long time. This is not something that just happened overnight. We've been working for years now to get this to market. So we're very, very excited because, I mean, IPOs, retail has always been the last one standing in getting into IPOs. Probably we've seen in the last 3 months, we've seen a lot of companies, issuers, allocating large portions of their IPOs, like we saw in SpaceX, right, to retail. That is new. But what retail is still getting pushed out of and not getting access to is pre-IPO or private companies. So very excited for this product.
So help us understand the bigger shift. What changed in the market that makes getting into companies before they actually go public so important for everyday investors right now?
I can touch on that. Yeah, so we've been seeing this trend for a while now. Companies are staying private for a lot longer. I think the average lifespan now of a private company is about 13 years. 10, 20 years ago, it was closer to 4 or 5 years. So that extra 8 years of private life for a company is where a lot of value is created. And I think another stat worth noting, 87% of companies today in the US doing over $100 million in revenue are private companies. And so if you think about the broader context of investing, that means if you want to really be investing in growth and generating alpha as an investor, you need to be allocating into private companies as well as public markets.
All right, so let's talk about access for investors specifically. Let's get to the practical aspect of it. If I'm a Webull user, walk me through what does IPO investing actually look like and what should I expect?
So pre-IPO investing, you must be an accredited investor, which is a self-attestation, an indication process. And then once the deal closes, we'll allocate shares based on the indications of interest across the different clients of Webull.
Just to add on that as well, I think one of the unique innovations that Webull is really bringing to market is that pre-IPO access and leveraging Monarch's APIs is available inside the Webull app. And so that's a real differentiator from other ways that investors have been able to access private markets in the past. Now you can go on your Webull brokerage app that you use today to invest in public markets, options trading, fixed income, and access private markets in that same user experience. And so it makes it a lot easier for investors who are looking for that access but may not know where to go to find it, to just get that from the brokerage app that they already use today.
All right, so let's talk money because everyone wants to know what they get for their money and what happens to the money when they actually put it to use. So when someone is actually using the app, what could they actually learn about each private company inside the app?
Yeah, so we provide extensive research reports that are available directly in the Webull app that really give a good sense of what it is that you're investing in. And so that's research on private companies. There's a live price feed that provides real-time pricing updates for these private companies, which is a new innovation that I think is really worth noting. Historically, access to real pricing data for private companies has not been available, especially to everyday investors. Now that chart will be directly in your Webull app to be able to view the price of the companies that you're buying. And then on top of that, there's a news feed that gives you real-time updates as to what these private companies are doing. So it feels a lot like investing in a public security, but obviously these are private securities, private companies that people can now access.
Yeah, I mean, and just opening up and shedding light on the process. Private companies traditionally have been something that's always been in the dark, and there hasn't been a lot of clarity on what I own, how do I own it, where does it sit? And working with Monarch, that was one of our core propositions to our clients to make sure it was transparent and the process was transparent.
So I want to talk a little bit more about the real advantage of doing this through Webull versus somewhere else.
Well, first, we are a regulated broker-dealer. We protect our clients' assets, and we are responsible for making sure that those assets are safely held. If you're accessing private markets through a random website, there's really no um, there's really no proof that it is legitimate. And there have been a lot of schemes and fraud. So putting this process behind a regulated broker-dealer opens it up, sheds a lot more light on the process, and gives a whole lot more comfort to investors.
Thank you guys so much for joining us, and very excited to see where this goes in the next couple of years.
Thanks for having us.
Thank you so much.
Hey now, didn't see you there. Welcome back to the show. Joining me now is Kyle Reedhead. He is the co-owner and head of research at Milk Road. Kyle, nice to see you today. Let's talk the cool stuff, interest rate cuts and the Fed. CME FedWatch tool says the Fed's next move is a interest rate hike, not for July, but for the month of September. Why do you think the next move may actually be a cut?
Yeah, I think that a lot of people's reactions are thinking that we're going to be in sticky or high inflation. We all, well, not me, but the market thought that we were going to have inflation very high last week, and it turned out to be one of the biggest downsides in inflation versus expectations in, I don't know, I think it was like 5 years or something like that. So it's been a while. And so I think inflation is under control. Obviously, we just had a spike in oil over the last week due to the war kind of re-escalating. But I think that will be shaken off once again. And so I think inflation is ultimately under control. The economy is strong, but not too strong. Unemployment is fine. And so everything just seems okay. And inflation doesn't seem to be out of control in any way. And I think it's actually going the opposite way now. And so I just think there really isn't a reason to cut rates. And so I think that they'll pause coming up next week. And I think they'll just continue to do that throughout this year. We might even see a rate cut at some point, but I don't know. The market doesn't see that today. So I think that's part of the upside. I really don't see them cutting here.
Kyle, macro indicators are important, but CapEx itself tells a fundamentally different story. What does that story tell you right now?
I mean, CapEx tells us we're going much higher. We've got Google who's going to have their earnings tomorrow, so we'll see if this is going to continue. But so far, every earnings cycle, the hyperscalers continue to raise their CapEx and their guidance. And so we'll see if that happens again, starting with Google tomorrow. My guess is they will raise and will continue to raise, into next year and even probably the year beyond that. And so I think this is really where the money's going. This is what's moving the market, not so much what's happening in the macro world. It really is CapEx, because this is one of the biggest spends that we've seen in a very, very long time. And so if you're looking at what's moving the market, it's semis, it's the neo clouds, it's, anything around the AI infrastructure build out. And that all comes from the largest companies in the world who make some of the most earnings in the world, deciding if they're going to spend more or less on the AI infrastructure build out. And right now it seems every quarter they want to spend more.
You have a triple-headed bull case. I call this the Reedhead indicator. CapEx up, inflation down, rates potentially being cut. What more should we know, and what more are you seeing as part of your thesis?
Well, again, I think the market really is controlled by what's happening with AI. And so the question is there still demand? And I think we're seeing so much of it. We had Kimi K3 come out last week. Everyone thought this would kill the market because it's one of the cheap open source models. And instead, I think what we're realizing is there's so much demand. 48 hours after they launched, they said their GPUs, they don't have enough of them. They can't actually provide the service to everyone signing up. And so I think there's just so much demand for AI. And as long as that demand continues and we see ROI from the companies that are using it, then I think we're just going to continue to see that demand further. So I think this earnings, that's actually a big thing I want to see from companies is, are they using AI and is it bringing ROI for them? And I think the answer is going to be consistently more and more yes. And if that continues, then the demand is just infinite for intelligence at this point.
AI and ROI. I like it. We'll keep an eye on it. Kyle Reedhead, co-owner, head of research at Milk Road. Kyle, thanks. We'll do it again soon.
Thank you.
Folks, don't go anywhere. A lot more Taking Stock coming up live on this Tuesday afternoon, live from the trading floor of the New York Stock Exchange. Don't go anywhere. Welcome back to the show. Eddie Zhang joins us now. He is the CEO of Arcus, a decentralized trading platform. Eddie, nice to see you here on this Tuesday afternoon. Really grateful you could take some time for us here on Taking Stock. First and foremost, Eddie, give us a bit of an introduction to your on-chain exchange, Arcus, for anyone a bit unfamiliar.
For sure. Arcus is a decentralized protocol for stock and perpetuals trading. We allow users to buy both stock tokens, which are one-to-one backed by Robinhood's liquidity, and trade perpetuals, which are leverage trading on stock tokens and crypto.
What is the gap in the global markets? What doesn't exist right now that you are trying to uniquely fill?
Definitely. I think there's two things that are really powerful. One is certainly like 24/7 trading, which I think has gotten like a lot of attention. Right now, we see over half of our trading volumes for stock tokens are during off hours when the market's closed. The other half is international access. So generally speaking, Robinhood is famous for offering zero fee stock trading to the United States. But internationally, access to like American stocks and equities has always been much more limited, as well as 0% fees are not that common internationally. So we're offering 0% stock token trading backed by Robinhood to many markets all over the world.
Eddie, how much of the demand for tokenized US stocks is actually coming from outside of the United States?
Oh, 100% is coming from outside the United States, since we don't actually allow for trading inside the United States. Stock tokens are not fully legally clear in the United States, so we don't offer stock token trading to America. And in America, I think people actually have pretty good options for stock token trading, which is why we don't have access for that. We do offer the new ADR for SK Hynix, which is like a really popular Korean stock due to AI chip trading. And so that is something that we're exploring, which I think may be of some value in the future if there is regulatory clarity on stock tokens in America.
So talk to me a bit more about your thesis. Why bring perpetual futures, or perps, beyond crypto and bring it into things like stocks, commodities, and indexes? And for anyone who is familiar with the way that perps work, does it essentially work the same way with funding fees, et cetera?
Yeah, we definitely think perps has like a lot of value in like multiple ways for stocks and for commodities. One way is certainly what we described, which is it allows for 24/7 trading in like a different way than stock tokens, because it's a different form of capital efficiency. And so we've seen kind of adoption curves on commodity perpetuals specifically to be like very high. The second reason would be Robinhood allows for both like stock trading and derivatives in the form of options. Options offer like a different way to hedge exposures versus perpetuals. So we believe that perpetuals on stocks is a simpler instrument for many retail traders to express something similar for like a different risk profile. And I can describe that in more detail, but effectively speaking, perpetuals you borrow and then you're like subject to like risk of price movement over time. Whereas options, you're locked on time, but you're not exposed to price movement as much over time in terms of liquidation. And so they're different instruments. We believe certainly that perpetuals are like easier to understand for like the average person, because basically you're just borrowing to buy a stock or to short a stock, as opposed to like options.
I'm out of time, my friend. Yeah. I'm up against a hard break, Eddie. I got to leave it there, but please come back and see us. I got a lot more questions I did not get to ask you. Eddie Zhang, CEO of Arcus. Don't go anywhere. A lot more Taking Stock on this Tuesday afternoon coming up right after this.
All right, thank you.
Time now for a few headlines in the world of fintech, crypto, and artificial intelligence. At this hour, the crypto majors trading flat to the upside. Bitcoin hovering around 66,300 and change. Next up, top U.S. AI executives urging tighter oversight of advanced Chinese AI models. The move comes as the Trump White House weighs possible restrictions over concerns of national security. Finally, a new filing revealing Netflix paid $587 million in order to acquire Ben Affleck's AI filmmaking startup, Interpositive, expanding its use of artificial intelligence for filmmaking. And now Scarlett Sieber of Money 2020 is back to explain all of the ways that fintech companies actually make their money. Take a look.
Welcome back. I'm Scarlett Sieber with Money 2020, and on this segment of how fintech companies actually make money, we're going to be talking about Airbase, where spend control stops being optional. Airbase combines spend management, accounts payable, and approvals all into one beautiful system. So how does Airbase actually make money? First, SaaS subscriptions. Of course, we got that SaaS model in the mix. Second, expansion economics as more workflows move into the platform. Third, organizational lock-in once policies and approvals live inside the software. So why now? In recent weeks, Airbase became part of a broader finance and HR stack, shifting it from a point tool into core infrastructure for how companies govern their money. That is absolutely essential. Airbase doesn't monetize transaction, it monetizes the discipline. So with that, that is how Airbase actually makes money, by charging for control before the chaos shows up. Do you have a fintech that you want broken down? Drop it in the comments below, and it just might make the cut. In the meantime, back over to you.
Markets rally here on this Tuesday here on Wall Street, led by tech and energy. Tomorrow here on the street, we'll get the latest quarterly results first thing in the morning from AT&T and GE Vernova. And this time tomorrow, a few big ones: Tesla, Google, and IBM. Thanks for watching this Tuesday edition of Taking Stock. Have a great Tuesday night. We'll see you again tomorrow.